Well, hello, folks. It's T. Brian Hayes here from Hayes Advisor Group with your September Educational, Economic, and Market Review. In this month's video, we'll discuss some of the events that influenced the economy and the markets in September and help you understand what they could mean for you as an investor. As always, please stay tuned at the end for a required disclosure statement. Well, the Federal Reserve was again the source of much speculation in September. The central bank met in September to vote on interest rate policy and decided not to raise interest rates again. The Fed's in a tough spot right now because it needs to bring rates higher to avoid overheating the economy. However, central bankers also need to be careful not to raise rates too soon or too fast, or they risk hurting the economic recovery. The economic data right now looks moderately good, but the Fed knows that there are a lot of risk on the horizon. So what comes next? Well, it's not likely that the Fed will raise rates at the November meeting when the presidential election is still a political factor. So that makes the December meeting very important. Wall Street thinks the odds of higher interest rates after December are over 60%, so we'll have to wait and see what happens. Interest rates have complex effects on the economy, on corporate profits, on markets, and consumer finances, which is why investors care about where rates are going to go. Now, the third release of Q2 economic growth data shows that the economy grew 1.4% in the second quarter. While the growth is below trend, the economists hope to see stronger growth return in the third quarter. Over the next several weeks, all eyes are going to be on the presidential election, the Federal Reserve, oil prices, and Britain's exit from the European Union. These are all a lot of uncertainties. As always, we're going to keep you informed of what's going on. So that's it for this month's Educational Economic Update. Now let's turn our attention to the markets for September. Well, markets bounced up and down in September, but ended up basically flat for the month. Volatility continued to stay low, meaning we are in a low-risk bull market environment currently. Sometimes, though, it doesn't feel this way, especially with the swings and all the negative press and reports. However, overall risk remains low right now, but that is expected to change sometime soon. The key to investing is to make the proper adjustments when market conditions change. We're constantly tracking all this data, and every day we make the necessary changes as needed. So we'll continue to do that. That's it for the market update for September. Once again, this is T. Brian Hayes here with Hayes Advisor Group, signing off for the month of September 2016. Please note that nothing we talk about here is a recommendation. If you'd like to discuss your personal financial situation, please give us a call at 1-800-939-1603 or locally at 765-452-PLAN. Also, check out our website as we're constantly updating information on there, and that's www.hayesadvisorgroup.com. Again, signing off for September. We look forward to talking to you in October.